Zillow just released their most recent housing market predictions for 2025, and their predictions are a little different than usual. The topics they cover are not the same topics that they've covered before. So in this video, I'm going to cover the 6 predictions that Zillow just announced for 2025. So let's just dive right into it. And the first prediction is something we're pretty much seeing across the board, which is that home values will grow at a modest rate. And what they're saying here is that home values nationally are forecast to grow 2.6%, a softening that would be welcome news for financially stressed buyers. And the forecast is based on the assumption that interest rates will stay around 6.5% and that more sellers will list their homes for sale. And this is something that I'm noticing as a sentiment for both buyers and sellers. You know, in fall, we had this kind of hope that interest rates would continue to fall into the 5% range. Everyone was kind of predicting that. And as we've gotten into wintertime now, we're seeing that interest rates are going to be pretty stubborn and they might be hanging around that 6.5% range, maybe go back into the 7s like we've seen it go a couple times since then. So more people are going to start listing their homes on the market when they realize that there's really no end in sight. There's not going to be the 4 or 3% interest rates that they've been hoping for. And this is pretty much the environment that we're going to be in for potentially a while. And the reason they think it's going to be better for buyers in 2025 is they anticipate 4.3 million home sales versus the anticipated 4 million that they're expecting it to close out at in 2024. So that means more houses on the market for buyers at the same interest rate. In theory, things should be a little easier for buyers in 2025. And here's actually a really good point that I like that they made here, and that's that a calmer market could also make it easier for buyers to budget for a down payment instead of playing catch up when values escalate rapidly. And I totally agree with this. I think it was very difficult in the COVID market for buyers to keep up with the prices because not only did their down payment increase, but when they had to be competitive, they needed cash on top of that to pay for things like an appraisal gap where they cover any difference in the appraisal, or saving extra money for potential repairs when they're dropping inspections, which was just a terrible thing that was happening during that time. I just hated seeing people drop inspections. But what they're saying is a calmer market would mean less of that catch up, less of that cash that they have to keep stacking, and that they'd have more opportunity to enter the market and become homeowners. And here's something I think is really interesting. They're listing the markets that they think are going to grow the most in 2025. And the biggest market, or the one they predict to grow the most, is Hartford, Connecticut. Now, that wasn't on my radar, and maybe I just don't know much about Connecticut, but I was anticipating the DC region to be on this list. And I do think that they kind of forget about the DC region on this list because it's not even in the top 5. We have Providence, Rhode Island at 3.9%, Miami, Florida at 3.8%, Charlotte, North Carolina at 3.3%, not surprising. Indianapolis, Indiana at 3.3%, something that is very exciting for people that own investment properties there like myself. And Columbus, Ohio, kind of up there with Indianapolis as one of those places to invest. That's exciting for investors. Now, there are the top 10 metros that are expected to have a decline or the slowest growth in 2025, and New Orleans coming in at negative 3.8%, and San Francisco, not surprising, at 2.3%. I would think that San Francisco would have a larger decline than New Orleans, but something's going on down there that is leading to this. So something to consider. And then Austin, Texas, also not all that surprising that they're going to have, or they're predicted to have a 0.4% decrease in values. And Austin saw a huge boom during COVID. So again, this is not so surprising. You know, the exodus in San Francisco is probably the main cause for their decrease, but the huge housing boom in Austin is where I think this is coming from for them. Now, the second prediction is something that I love because no one ever wants to actually predict mortgage rates anymore. They've been so wrong over the past couple years about the direction of mortgage rates. So what they say is mortgage rates are expected to ease but remain volatile. And they say our best educated guess is that mortgage rates will be lower by the end of 2025 than at the start of the year, which they said in 2024 as well. It did turn out to be true, but with the possibility of volatility in between. So they kind of cover themselves there. Look, there's no telling what's going to happen with mortgage rates. We've been hoping that they're going to drop. Every prediction has been that we should have been in the 5.5% range in early 2025. And that's just not the case anymore. We're still in the high 6s to mid 6s, depending on the day you look at rates. So this is always a funny one. I think you should take all mortgage rate predictions with a grain of salt and just kind of keep that in the back of your mind. But don't base your home search or your home sale on projected interest rates. And the third prediction is interesting. It says that the Southwest will join the list of regions tipping in the buyer's favor. And I think this is also a result of that COVID boom that they saw in a lot of those Southwestern communities and Southwestern states. But here's something interesting. They say one important caveat to this is if mortgage rates fall more than expected, it's less likely that buyers markets will spread to the Southwest. And this is because a rate dip would pull more buyers in than sellers into the market, which it would increase competition among buyers and give sellers the edge in negotiations. And well, I think something that actually contributed to these Southwest markets doing so well during COVID is work from home. All of the people that lived in California and more expensive areas, even Washington, Oregon, they moved to the Southwest because they could get more for their money. They could be in warmer climates, maybe not California, but warmer climates than Washington. And they could work from home, and that led to a huge boom in other areas that wouldn't normally see it. So I don't know if it's entirely just interest rates. I think that really led to how exponential the growth was in the Southwest. But if people have to start going back into the office, which we've seen that trend across major corporations, and now the federal government is going to have it too, we could see these towns definitely tip more into a buyer's favor for that reason. I don't really anticipate if mortgage rates drop that that's the only reason that would happen. All right, and the fourth prediction is that deals for renters will be less common, and this is because they're saying that the new construction rental units were serious competition for existing units where landlords were trying to rent their own units, and then right down the street they were having this boom of new construction rental units. And because that boom is slowing down, they're anticipating that the existing unit landlords will have to offer fewer concessions, like offering free first month's rent or a free TV or whatever it may be in their units. They don't have that competitive pressure with the larger corporations that are building these massive complexes anymore, and it'll be a little easier on landlords, but that means that renters will get fewer concessions moving into 2025. And the fifth Zillow prediction is that pet friendly will be a non-negotiable for property managers, and the reason they say this is pet friendly properties are expected to become the norm as property managers recognize that a majority of renters consider pets as family members, and with 60% of renters having a pet, up from 46% prior to the pandemic, it is not surprising that nearly half of renters surveyed by Zillow said they passed on a particular property because it was not pet friendly. And this is important as well. As rentals become the first home for a growing number of families with babies and young kids, expect to see more amenities that cater to them. And what they're saying here is because of the affordability crisis, so many people are forced to rent, and they have growing families. They have pets where normally they'd want to buy their first home, start building equity. It's been very tough to do that in this COVID and post-COVID market. And because of that, they're forced into rentals, and they're going to need to keep their pets with them. And the sixth prediction they have, I believe, is also due to the affordability crisis, and that's that Americans will take it down a notch with smaller spaces. And what they said is what had become a euphemism for small or cramped is now a sought after design trait, evidenced by the fact that for sale listings that mention cozy jumped 35% in 2024, according to Zillow's analysis of millions of home listing descriptions. And I've even noticed this with my own clients. Those who would be normally searching for their forever home are now searching for more of the starter home that is just big enough where they're not going to lose their mind. So that people are moving into smaller spaces because of the affordability issue. It's really for no other reason other than the competitive market that we've had that drove up prices, the limited inventory, and the interest rates. They just can't afford to get to that higher price point that they'd like to be in, where they would have more space. So they're forced into smaller spaces, and the market always adjusts, and listing agents like myself will realize that people are looking for cozy, and we add those words into those listings, and people are looking for that now. Now I'm curious, what do you think of Zillow's predictions? Are they on the money? Are they way off? Let me know in the comments below what you think of them and what you think is going to happen in the 2025 housing market. And something that I'm going to be looking out for in particular is what's going to happen with the federal government, with the new DOGE that they stood up, the Department of Government Efficiency. I think it could be very interesting what happens here. Me working in Maryland in the DC region, so many federal government workers are working remotely, and that drives where they live. So I'm very curious what's going to happen here. I'm going to be tracking it closely. I'm going to be giving you updates along the way because it could make a seismic shift in the Maryland real estate market, and it could be a good thing. So I'll make upcoming videos on what's going to happen there, what might happen. I'll be tracking every story along the way. So if you haven't already, make sure to hit that subscribe button so you don't miss any of my upcoming videos. And if you are considering a move to Maryland, make sure to reach out to me. Go to the description below and click on the link to schedule a one-on-one consultation. We'll get a plan together for your move to make it go as smoothly as possible. And as always, if you like this video, make sure to like, and like I said, subscribe so you don't miss any of my upcoming videos about moving to Maryland.